Tesla's dominance in the electric vehicle (EV) market seems unmatched, but the rising competition poses questions about how it could influence Tesla and its investors. In this video, we delve into insights from Cathie Wood, the CEO of ARK Invest, who shares her vision of a world dominated by EVs and emphasizes the need to adapt to this transformation. Alongside other Tesla advocates, we'll examine how Tesla could potentially grow your investments in the coming years. Don't forget to like this video and subscribe to Tesla Stock News for the latest updates. Recent insights from a prominent Tesla investor reveal that global EV sales are set to surge in 2023, with a significant increase compared to prior years. The International Energy Agency (IEA) has published a new report offering an optimistic outlook for the EV industry. According to this report, sales are expected to grow by 35% in 2023, following the 10 million EVs sold worldwide in 2022. For 2023, projections suggest 14 million units sold, pushing EVs' market share from 14% to 18% globally. China continues to dominate the EV landscape, accounting for 60% of global electric car sales in 2022. While the US and Europe lag behind, they are steadily making progress. By 2030, the IEA estimates that EV market share will rise to 35% globally, with the US reaching 20%, Europe 25%, and China maintaining its lead at 40%. However, these projections reveal a gap between current trends and governmental ambitions. For example, the Biden administration aims for 50% of all US car sales to be zero-emission vehicles by 2030, while Europe targets carbon neutrality by 2035. These goals highlight the challenges and uncertainties of transitioning to a fully electrified future. The shift to EVs is gaining momentum as governments worldwide recognize the environmental benefits of clean energy. Australia, for instance, has implemented policies encouraging EV adoption. Analysts' predictions for the future of EVs vary, but the overall trend points toward growth. Major markets like China, Europe, and the US are driving this change. In 2022, global EV sales surged by 60%, with 1 in 7 new cars sold being electric. The total number of EVs on the road surpassed 16.5 million by the end of 2021, and forecasts suggest this could grow to nearly 350 million by 2030. Achieving these ambitious targets requires addressing key challenges, such as diversifying battery manufacturing and securing critical mineral supplies. Supply bottlenecks and price increases could slow progress. However, EV prices are expected to drop significantly, potentially halving their current costs. This price reduction could make EVs more appealing to consumers, amplifying their market presence. Additionally, companies are increasingly investing in technological advancements to improve battery efficiency and durability, which could make EVs even more desirable. EVs already offer clear advantages over traditional internal combustion engine (IC) vehicles, including greater energy efficiency, lower maintenance costs, and fewer moving parts, which enhance reliability. Studies show that EV maintenance costs for vehicles like transit buses are 40% lower than for ICE equivalents. Additionally, EVs lose far less energy to heat and friction, making them more efficient overall. Despite these benefits, transitioning to EV manufacturing is a complex process requiring significant changes in technology and infrastructure. For instance, the development of extensive charging networks and advancements in fast-charging technologies are critical for supporting mass EV adoption. Global EV sales exceeded 10 million in 2022, with China leading the charge. According to the IEA's 2023 Global EV Outlook, this trend of rapid growth continues. EVs accounted for just 4% of the global car market in 2020, but by 2022, that share had risen to 14%, and it's expected to hit 18% in 2023. This shift signals a transformative era for the automotive industry. The rise of EVs is expected to disrupt the century-long dominance of ICE vehicles, with electric buses and trucks following suit. Moreover, the rise in shared mobility solutions, such as electric ride-sharing and autonomous vehicles, is poised to further revolutionize the market. Battery costs are a key factor in this transformation. As battery prices decline, EV ownership becomes increasingly affordable, and electricity costs, especially from renewable sources like solar and wind, are expected to remain lower than gasoline. Tesla investor Cathie Wood predicts that traditional automakers must embrace EV production to stay competitive. Failure to do so could result in a loss of market share to companies like Tesla. As Tesla continues to innovate, its advancements in battery technology, including the development of the 4680 battery cell, could give it a substantial edge over competitors. Tony Seba, an expert on technology disruption, highlights the challenges and opportunities of EV adoption. He emphasizes that transitioning to EVs requires more than manufacturing. It demands a robust charging infrastructure and addressing the environmental impact of battery production. Seba predicts that by 2030, EVs will dominate the automotive industry, with government and private fleets transitioning entirely to electric models by 2035 and 2040, respectively. He also foresees significant progress in battery recycling technologies, which could mitigate environmental concerns related to critical mineral extraction. Ambitious policy initiatives, such as the European Union's Fit for 55 package and the U.S.'s Infrastructure Investment and Jobs Act, aim to accelerate EV adoption. These programs are expected to increase the market share of EVs in major regions. By 2030, the average EV sales share in China, the EU, and the U.S. could reach 60%. Governments are also providing subsidies and tax incentives to make EVs more affordable for consumers, further driving demand. Meanwhile, traditional automakers are setting their sights on ambitious EV production goals. BMW plans for half of its global sales to be electric by 2030, with an interim goal of 2 million EVs sold by 2025. Ford aims for 50% of its sales to be electric by 2030 and intends to produce 600,000 EVs annually by the end of 2023. General Motors has committed to a zero-emissions lineup by 2035. These commitments demonstrate the industry's recognition of EVs as the future of transportation. This growing shift has had a notable impact on ICE vehicle sales, which have declined by 25% over the past 5 years. The environmental advantages of EVs are increasingly clear, and more consumers are considering making the switch. A study by Argonne National Laboratory highlights the reduced maintenance and energy costs of EVs, further reinforcing their appeal. Additionally, consumer sentiment is shifting, with more buyers prioritizing sustainability and environmental impact when choosing vehicles. The EV market's growth is transforming the global energy landscape and reshaping the automotive industry. As governments and companies invest in renewable energy and battery technology, the path to widespread EV adoption becomes more accessible. However, the road ahead is not without challenges. Supply chain issues, mineral extraction concerns, and infrastructure demands must be addressed to ensure the industry's long-term success. Companies like Tesla are also exploring vertical integration strategies to secure their supply chains and maintain production efficiency. For investors, Tesla remains a strong contender in this rapidly evolving market. Its commitment to innovation and expansion positions it well to benefit from the ongoing shift to electric mobility. But as competition intensifies, Tesla must continue to innovate and scale production to maintain its leadership. Furthermore, the development of Tesla's energy storage solutions, such as Powerwall and Megapack, could open new revenue streams and solidify its position as a leader in the clean energy revolution. Thank you for watching. If you enjoyed this video, give it a thumbs up and subscribe to Tesla Stock News for more insights on the future of EVs and Tesla's role in this exciting journey.